Hello and good day to all friends. This is Mojtaba Rasti from the Thales team, and today is October 15th, 2025. I'm here with a Bitcoin analysis using the Thales Market Screener tool. Please note that these analyses are for educational and informational purposes only, and if you use them to take positions in the market, any profit or loss is your own responsibility. As always, we're on the 4-hour time frame, and the upward move we were expecting has happened, reaching up to 113,600 before reversing downward. With this green candle, we've moved above our trend line, and now we're seeing a pullback to this trend line again. We still believe that the higher probability is for the price to move toward 115,500, completing the double bottom structure we've seen here, and then possibly heading toward 119,000 and 120,000. This scenario is still on the table and
we give it more weight. This doesn't mean that a move to 107,000 or 108,000 is completely ruled out. No, we could still see those levels. It's possible we come down from here, even see 118,000, and then move down again. Of course, we're not looking too far ahead.
Based on our analysis, we're just considering the coming days for now. That's why we still give more weight to the scenario of completing the double bottom and moving higher. Let's turn to the market screener and see what insights we can get from it today. So, from the beginning of today up until this moment, for the expiry date of tomorrow, October 16th, let's refresh. The data shows that 2,500 bitcoins have been traded in the form of 1,220 option contracts, which is not a significant result. The curve on the bullish side is clearly more dominant and more prominent than the bearish side. On the bullish side, it goes above 123,500, entering an upward trend, while on the bearish side, it goes into loss below 92,200. Naturally, below 92,000 is not a reasonable target for us for tomorrow. So, we need to zoom in on this and look at it this way. We should look at it like this, which naturally gives us a bullish outlook, and right now, this is where we are. If I turn on the delta, you'll see that our delta is near a bottom, meaning we're currently in a position to move upward. The delta is decreasing along with an increase in price, which means the price ceiling has been observed. The peak of this ceiling, as you can see, is here, where the call selling ends, around 116,000, which we said could be the first level we reach. If we move downward, along with a decrease in price, we see an increase in delta, which is essentially a move toward the bottom. These are the hours when this has happened. From here, we've moved downward and are realizing this bottom. So, the end of this delta increase along with the price decrease is at 110,500. So, we might come a bit lower, even down to 110,500, which has already happened to some extent. If we come and see the bottom, and if 110,000 breaks, then you'll see that on the downside, we have a series of contracts, meaning with a price drop, there's a sharp decrease in delta, and a series of put contracts have been bought. But keep in mind, these put contracts that have been bought on the downside have their break-even point at 92,000, which is quite far away. What does that mean? What this means is that these puts that have been bought here, basically from 110 and below, have to pay a significant premium and endure being in a loss. They have to tolerate being in the red in this area until they reach profit here. So, it's not very reasonable. But on the upside, you can see that if we see this bottom realized up to 116, the call selling, in fact, our ceiling is realized, and after that, if this ceiling breaks,
we have call buying, and the delta, along with the price increase, is bullish up to even 124, and if we go to the end of the delta, up to 128. So, a bullish outlook can be inferred from this scenario. If we move the slider forward, this outlook still largely holds. It doesn't change much. Let's go to the process database. In the process data, you can see we're in a volatile state. Something like a strangle or now a straddle is visible. The bottom here is the seller's bottom, the put seller's bottom at 111,400, which we're very close to. The ceiling is actually the call seller's ceiling at 115,000, which is the same target we talked about. Look at the delta, on the move down, see how much it has penetrated the upper part of the chart, while on the price increase side, the delta's penetration in the lower part of the chart is much less. This indicates a higher volume of put selling, meaning traders are looking for a bottom. They want to see a price floor, which we're also close to. In my opinion, in the short term, this bottom has been seen, and we're setting the stage for a move toward 115 and 116. Now, let's update our indicator and zones on the chart and continue. So, you can see the intersection of the buyer and seller curves. On the upside, our agreement is at 114,600. Let's round it to 115,000. At 115,000, that's the profit zone, and the lower agreement is at 110,300, which is in the loss zone. Our upper agreement area is because the seller doesn't want above 114,700, and the buyer wants above 114,500. So, the buyer and seller agree on the price being in this zone, while the lower area is not an agreement zone. The seller doesn't want below 110,900, but the buyer wants below 108,800. So, this is not our agreement zone. Again, based on this curve and the intersection of the curves, we can consider the probability of an upward move to be higher. Let's put these into the indicator and continue. Now, you can see our indicator bands, especially the bottom, have moved upward compared to yesterday. The ceiling has also moved up, but a bit less. The ceiling is still around 115, and the bottom is at 113. So, we could even come back and touch 113 again, but it seems the price is building a bottom here. We're still insisting on a move toward 116. Let's update the zones and continue again. As you can see, the zones are very close to each other. It seems our expected volatility range for tomorrow is also low, about 110,700 to 115. In these conditions, it seems we should expect volatility until tomorrow, and as we said, the upper zone is the agreement area, and its value is much less than the lower zone. This also shows that buyers and sellers have a high level of agreement in this area, while the lower area is a point of disagreement between buyers and sellers and has more value. There's more disagreement. The lower zone is roughly from 108,700 to 110,800, the upper zone from 114,500 to 114,800, and the middle zone, which is the maximum profit and loss for buyers and sellers, is from 112,000 to 113,000. Now, let's take a look here, switch the database to processed, and see if the intersection of our curves changes or not. It's mostly the same, but you can see the upper agreement has moved up into the loss area, but still, compared to the lower agreement, it's much closer to profit. Again, a bullish outlook can be inferred here. Let's go back to the raw database. Now, let's bring back the sell trades and refresh. If we zoom in here, for the short term, we might expect this bottom fluctuation here and the ceiling here. The bottom was 112,300, which we even went below, and now we're in the red at 111,200, but the ceiling is 115,500. So, we might be stuck in this fluctuation until tomorrow. Let's turn on delta and gamma and see what we can infer. As we said, here we have a main short gamma for the taker, which comes from selling calls and puts at 113,300. The maker has a long gamma at 113,300. Usually, long gammas act as resistance, and you can see we've hit it several times and bounced down. There are also two long gammas for the taker, and you can see the lower one is stronger, which is actually the maker's short gamma on the other side of the trades. On the upside, we have a short gamma maker at 119,500. So, we bring this here at 119,500, and we also have a short gamma at 107,500 on the downside. These are our important gammas here. On the upside, this gamma comes from call buying, and its counterpart, the short gamma maker, is the call seller with negative delta. If the price reaches here, the market maker will buy in the spot or futures market to hedge their negative delta, which increases market volatility to the upside. The same logic applies to the short gamma on the downside. The important points where we could see the price move up, look, one is here, the intersection of the red curve with the break-even and entry into profit at 112,500. This is the gamma we talked about. Then, the profit peak on the red curve is at 113,900. Here, the red curve enters loss at 115,500. Here, the gamma intersects with the red curve at 116,130. And look, right here, this is almost the phase of exponential delta growth upward, around 118. These are all important numbers we can get from the intersection of the curves. On the downside, we have this intersection ahead, the gamma and red curve at 111, the delta peak here at 110,500. See, here the red curve has a break in its slope at 109. Here, we have the intersection of delta, the green curve, and the gamma curve at 108. And similarly, you can get important numbers like this as you go lower. Okay, I'll shrink this box and put it here. Let's take a look at tomorrow's expiry. If I add Friday and then subtract tomorrow, October 17th, Friday, for October 17th, Friday, the trades that entered today, their outlook, 90 seconds, the bottom was seen at 108, the ceiling at 115. The bottom was seen at 108, the ceiling at 115. And here, we also have an intersection of the delta curve with the red curve at 110,700, which again could be a point where we see support and then possibly move upward. And you can see that on the upside, our delta has penetrated more deeply into the loss area. The number of call sales seems higher, and trades are more inclined toward the price ceiling, so we might see 115 to 116 again here. The profit peak of the curve is also at 112,300. So, this is the decision for Friday, October 17th. As we go forward, the curve conditions remain the same. But there's an interesting point. As I look at more recent trades, see where the bottom is. As I look at more recent trades, the bottom moves higher. Look, in the recent hour for Friday, the bottom is now seen at 110,400, not 108. And that's a point in itself. 110 here could act as support.
So, it looks like we'll be volatile until Friday, probably between where we are now and 115,500 to 116, until this double bottom structure completes, and then maybe we'll move toward 118 and 119.
Okay, let's take a look at the trade details in the raw database. Out of 2,500 Bitcoin traded, 1,369 Bitcoin were bought, of which 826 were call buys and 543 were put buys. So, our call buying
Dominates, and it's clearly higher. Where do they want? They see profit above 114,200. They see profit above 114,200. And in which direction? Look, from the current hour, from now until the time we calculated the incoming trades, about 17 to 18 hours have passed. So, if we go back 18 hours, that's about 5 candles. Even if we count from this candle, 1, 2, 3, 4, 5, we were here on this candle. We were at the peak here on this candle when the options trades we're analyzing entered. So, the calls we're seeing haven't been realized yet. That is, this bullish candle, this green candle, doesn't include them yet. The calls that dominate here and want above 114,200, 300 haven't been realized yet. The puts that have been realized, where do they want? The puts, which, as you can see, we're very close to, are put see profit below 110,500. On the very candle we're on right now, we've come down to 110,700, so our puts are almost being realized. So, our upside still hasn't materialized. What about the sellers? The sellers, 1,132 Bitcoin. 1,132 Bitcoin sold, with 660 call sales and 471 put sales. Here too, call sellers are dominant. They're seeing the ceiling, which again shows a bearish outlook. Where do they see the ceiling? The ceiling, they see it at 114. They don't want anything above 114, which still hasn't been realized yet.
Again, you can see the incoming trades start from here, 114.
You could say that we initially moved downward. It still hasn't happened yet, pretty much. Of course, the shadow of these candles is close too, but considering that we first moved downward, it seems that initially the puts, that is, selling puts, did not want the floor to go below 111,800, and now we have even passed that level. So, they considered 111,800 as the price floor, but we have already gone past it. So, in a way, we have reached our lower target, and now it is probably time to move upward. Okay, let me reset these to the original state and let us take a look at the process database. In the process database, there are 1,031 Bitcoins. You can see that the situation is volatile, and we have reached the bottom of the fluctuation. Look, we are here now, and after this, entering would be at a loss. So, actually, we can expect to move upward to 113 and even higher, up to 115, and that should be part of our plan. Now, let us see what high-volume trades look like in the process database, 10 Bitcoins and above, and we have 47 trades, 15 Bitcoins and above, 14 trades. We can analyze these. Well, as for block trades, we only have two trades of 25 Bitcoins. One is a long put with a strike at 112,000, which we have basically reached now, and the other is a long call with a strike at 113,000, meaning they want profit above 113,000, which could be one of our targets. and overall, the chart at this volume is bullish. Now, let me set it to 10 Bitcoins. You see, 10 Bitcoins, 47 trades. So, maybe here we have block trades as part of a strategy. This might help us. Look, here we have these two, which you can see is a straddle. It is a straddle, and we have reached its floor. Where is its ceiling? 114,800, which is basically 115, and the profit target is 113,200. So, in a way, this can be interpreted as bullish. We have these two again, the same straddle setup with the same price range. So, let's add them all up together. You see, these are all the same, and these as well, and these are probably similar strategies too. Look, these two are here, and these two, and also these and these. All of these that we've checked are block trades, and together they represent a straddle position totaling 275 Bitcoins. We've reached the floor of this straddle, and if it goes any lower, it will be at a loss. So, most of these traders didn't want the price to go below 111,200 for tomorrow, and their ceiling is 115, with their profit target at 113 for tomorrow. So, we'll probably see this volatility tomorrow. The interesting point is that when we look at the 15 Bitcoin trades, you see the curve becomes bullish. So, the 15 Bitcoin trades, the big players, the big trades, are bullish for tomorrow. We're also at the beginning of the upward move. Look, at the start of the delta, the move upward begins from 115,200. So, our outlook remains bullish. Let's look at the actual trades here. For example, there's a 29.6 Bitcoin trade, which is a call at 113. Anyway, the overall outlook is bullish. Let's take a look at liquidity. Yes, here you can see that in the past 24 hours, we've consumed this very strong liquidity level. You can see that up to 110, up to 110,200, and up to 110,400, there's liquidity here, and below that, it's empty. But once this is absorbed, it could be time for an upward move. Above, at 114,000 and 113,800, we have high liquidity, and then at 115,000, liquidity has accumulated again, which could be the next price target. The 48-hour chart shows this even more clearly. We have a high concentration of liquidity at 114 and 115, and enough liquidity has been consumed at the lower levels, especially at this strong liquidity level. Now, at most, we have liquidity at 110, and after that, the rest is scattered. So, let's focus on this liquidity concentration. Therefore, we're still sticking to our bullish outlook. Look, right now this candlestick is forming right on the trend line, and it's turning into a hammer with a bullish aspect. There are still 2 hours left for this candle, but it's turning into a hammer, the shadow is staying, and it's becoming a hammer. If this happens, it could be a signal that sends us toward around 115 to 116, and then in the coming days, we'll see whether we get some volatility here and then get launched toward 118 and 119 or not. Thanks for your attention. Until the next analysis, goodbye.